Why do people overpay for multifamily property? Well, I've actually tested this and I've talked about this before. People overpay for multifamily for a couple of reasons. The main reason is they understand it, right? So the craze that's going on right now is you're gonna hear everybody talking about it. I want to buy a 10-unit apartment, 50-unit apartment with all these syndication guru programs, conferences. Everyone's gonna say, I want to partner up and I want to buy a 100-unit property, right? More and more excitement is generated. Very rarely are you going to run into an investor who says, look, I buy office buildings. All I do is I buy office buildings, I renovate them, I make them look really nice, and I put the WeWork type of concept in there and I sell these things. That's not really going to happen. And I'll tell you why. Most investors that invest in real estate are residential investors, right? They buy a house, they fix it up, they sell it. Maybe they'll refinance it, pull some cash out. Maybe they'll rent it to someone else. If they own the house, they've lived there, they'll move, they'll start renting that house. So all kinds of strategies have worked for the residential investor. I've actually written a book about residential investing, and I talk about the different strategies you can use. So you're gonna have an issue where a sophisticated investor is not going to want to take a risk on a huge land development all the time. They're not going to want to buy 10 acres and start outfitting it with all kinds of stores and bring in the new traffic. Certain kind of developers do that. There's very, very limited skill set, right? Now, the average investor, maybe they'll do stocks, bonds, I don't know, something like a futures or an options market, something like that sense, where it's a pretty liquid investment. Real estate is not very liquid, right? You may have 200,000 of equity, but it takes you some time to sell and get the funds needed for that sale. Now, if you are trying to buy a house and rent it, it's a very simple model there, right? You're buying a house. Your mortgage is $1,000, you're gonna rent it for $1,200. So maybe you buy 2 and 3, then you say, you know what, I wanna go bigger. So naturally, the evolution is an apartment building. Now, it's not likely for someone to say, I wanna get into industrial investing, unless maybe they're a plumber or something, or they have a use for that building. So what's happening now, because of the rates being so low and so favorable, money being so easy to acquire, what's happening? Investors have access to capital, right? Now, a lot of these investments are not accredited investors. So if you really pay attention to a lot of the syndications, a lot of the groups going on, they're really not professional investors. They're kind of, hey, they see the shiny object, they want to get in. Hey, more power to them. I hope everybody makes lots of money. But the reason someone's willing to overpay is they would rather deal with the devil they know. And the devil they know is apartments. They don't understand a more sophisticated approach to something else. And I'm not saying you should go out there and try to learn it. I'm just simply telling you what you're going to see happening is what happened years ago when investors were overpaying for something. Then they pretty much got caught with their pants down, right? Why did this happen? Well, it's simple. Most investors, when they see a chance to make $50,000, they're going to go after it, right? Then what happens? Well, more people get into it and the pie starts shrinking. Now your 50,000 becomes 30 and you say, you know what? I have a job. I can possibly take a little more risk. And then they start making 5 or 10,000 and then they really take the risk and they start breaking even. And they're just really more adverse to that risk. Well, if you're going to buy a 20, 30 unit property, whatever it is, an apartment building, a 30-unit apartment building, you know after you do your financing and everything, you get great terms. If you're cash flowing a small amount, you're thinking, you know what, I can kind of make this happen, I can do this. Well, a lot of times your investment dream becomes a nightmare, right? Because maybe you're not managing it properly, you don't know what's happening, you overestimate some things. Some things could happen, some things, who knows, could be great for you. You may spin it the other way. Now, but what you're gonna end up seeing here is when there's a lot more money there is generally going to be less supply, right? Because people have more access to cash. Now, 10 or maybe 8 years ago, when there was a lot of apartment buildings, everybody was buying these things for like $30,000 or $40,000 a unit. Now, this is in Tampa market. The average that I'm seeing is about 95,000, sometimes up to 100. It really depends, right? So be really careful and just understand that the craze is happening. It doesn't necessarily mean you have to go on it because everybody else understands it. You just need to be careful and protect yourself. And I've been warning investors to, if you're gonna get a 3 or a 5 year, try to stretch that out. Who knows what's gonna happen? If you can get a 10-year term to be safe, do that. Some people I've heard they're getting a longer term, that's even better. And I hope that was helpful for you. All right, that's all I got for you. Like this video, subscribe to this channel. Questions, comments, let me know. Glad to help and answer. And I hope you guys have a great week. Thanks for watching.